All right, folks, welcome back to the NADLIN Forum Podcast Daily. I'm Ruby Sturt, as always, here with Lior. And today, well, I feel like this is the one everyone's been waiting for, right? We've got the Fed basically teeing up what looks like an interest rate cut. And honestly, that's going to shake things up for almost anyone with a loan or even just a piggy bank.
Yeah, absolutely. Ruby, every time something moves with the Fed, people get really anxious. But this time, it's more about what you actually do before the headlines hit. So let's start with debt. And I mean the ugly kind, credit cards, car loans, those nasty interest rates that just don't go away. Because even with the Fed cutting by, a quarter point, that's not like overnight relief on your Visa statement. It's just not enough.
Yeah, and people always think, oh, once the Fed cuts, my card rate drops and I'll be fine. But it barely budges. I remember back when I was in uni, total broke student vibes, my bank dangled this shiny 0% balance transfer thing. I actually saved, I kid you not, over $400 just by moving my high interest card balance onto that promo card and then just smashing out payments. If I'd waited for some Fed move, I would have paid, triple the interest. So yeah, I'm a big fan of jumping on those balance transfer deals or even consolidating with a personal loan if you can.
And that's spot on. You've got to get proactive. What Stephen Cates from Bankrate says, don't just sit and wait for a headline. If you carry big debt, especially on credit cards or a gnarly car loan, find ways to move it now. I tell my clients, look for a zero interest balance transfer or see if you can get a personal loan at a lower fixed rate. Even if rates dip a little, it's the proactive moves now that actually help your bottom line. Timing really is everything, and waiting could mean forking out more for nothing.
Totally. And hey, if you mess around and miss those promos, you're basically handing the bank free money. It's not about being perfect with timing, it's about not letting the banks have the last laugh, right?
Exactly. And, this stuff really doesn't change much from country to country. I've seen people wait for a policy move hoping for a miracle, but the interest meter never sleeps. It's just clicking away. Where was I going with this? Oh, right. Don't wait for the Fed. Start cleaning up your high interest mess yesterday.
All right, so flipping sides. Let's talk about the savers out there. Honestly, you lot rarely get the spotlight, but if the Fed cuts, this is where things get interesting and maybe a bit urgent, because high-yield savings rates, they're probably headed down sooner rather than later.
Yeah, that window is super important. So high-yield savings, money markets, CDs, they're still paying a little over 4%. That's 10 times the national average right now. If you park your cash there, for example, $8,000 into one of these at 4%, that's an extra $320 in a year instead of leaving it to rot in a checking account for peanuts.
That's actually a great real-world example, like $320 that covers, half your groceries for a month in New York these days, or a whole month if you stick to rice and beans. But seriously, I had a mate call me last week stressing because her online savings account was about to drop the rate. If you lock in a term deposit or CD now, those rates stick, even as everybody else gets cuts.
It reminds me, a couple years ago back in Israel, the central bank chopped rates, and I immediately shifted most of what I had from my boring checking into a high-yield money market fund. The difference, honestly, was night and day. Even 0.5% more return makes a massive difference over the year. And listen, these higher yielding options probably aren't going to last. The second the Fed moves, the banks react, sometimes overnight.
Yeah, and as we always say, don't sleep on these deals. If last week taught us anything, remember that episode where we talked through data lags and how real-time info wins? Well, this is one of those moments. If your savings are still hanging out in a regular bank account, you're straight up leaving money on the table. And nobody needs that.
All right, so let's do the big one, housing. Everybody asks, should I buy? Should I wait? With mortgage rates dropping, earlier this year it was over 7%. Now it's closer to 6.3% for a 30-year fixed. The experts like Bob Schwartz are saying a Fed cut could finally unlock the frozen market. Sellers who've been sitting on their houses might finally list, and buyers waiting for relief could jump in.
And you can really feel the energy picking up. Even outside the cities, people are starting to sniff around again. But here's the catch, right? If you want the best loan deals, it's all about your credit score. Dead boring, but it's everything. You got to keep your debt below 30% of your available credit. And seriously, check your report for errors. Even one silly mistake or missed payment can hit you right where it hurts, your interest rate.
Right. I always say, it doesn't matter how many times the Fed cuts if your credit score is a mess. You're not getting the best rate. You want to be ready, not reactive. Review your credit report, disputing errors, staying on top of payments. Sounds simple, but it's huge in a market where every basis point counts.
I actually just helped a friend go through her credit report before buying her first flat. She found a random error, somebody's old gym membership or something. And after fixing it, her quoted rate went down by 0.5%. It saved her thousands. It's not the most glamorous part of real estate, but it's got the biggest payoff.
Exactly. So, whether you're looking to buy, refi, or just want better mortgage terms, spend those extra few hours getting your credit sorted before you shop, especially now when the market could heat up fast.
And that's what it's about, getting ready before the rush. If you're proactive, you make the Fed's moves work for you, not the other way around. All right, should we wrap it up there, Lior?
Yeah, I think that's a good place to stop. So, if you're holding debt, move on it now. Grab those high-yield savings deals while they're hot and get your credit in shape before the market wakes up. Easy, right?
Exactly, and trust us, you'll thank yourself in a few months. All right, folks, we'll see you next time on the NADLN Forum Podcast Daily. Lior, always good to chat with you.
You too, Ruby. Thanks everyone for listening, and until next time, bye for now.